So are we in a bear market right now in gold, or are we still in a bull market? Are we in a super cycle? What are we in?
We've been in a bear market for since about 2011. It started going down, 2012. And we hit an almost 5-year bear market, one of the longest bear markets in gold. Bear markets in gold tend to last 2 to 5 years, and bull markets also 2 to 5 years. And the length of the bear tends to affect the length of the bull market. Most people believe we came out of that bull market in January of this year, or that bear market, excuse me, in January of this year, and entered a new bull market. Is that bull market going to last 1 year, 2 years, 3 years, 5 years? I don't know.
It's interesting that you're saying that we've started a bull market in gold in January of this year, and here we are in December of 2016, and gold's still down, isn't it?
Well, no, actually. Gold is up about 10% on the year as of today, December 5th, I think, 4th, one of those days. And it's up 10%. It's been up 25% this year.
I haven't noticed.
But gold doesn't go up in a straight line.
Yeah.
Nothing goes up in a straight line. There are always mid-cycle corrections. If you look at that chart, the general up and the general down, it doesn't go in that perfect, it does this. And well, you can believe that it was either the shortest gold bull market in history, or you can believe that it went a little bit higher than it perhaps should have because of political uncertainty and the number of events we've had this year. And it's corrected a bit because it was a bit overbought, and it will resume its longer-term bull market, which is what I happen to believe.
Well, I think it's always interesting when you look at investors out there. I like to measure investor sentiment. Back in 2011, like I said, when I was presenting to a group of traders and they berated me for calling the top in the gold bull market, when you start seeing gold booths at every shopping centre saying cash for gold, that starts worrying me that we might be near a bull market peak. Now, obviously that's peaked now, and I wonder whether investor general sentiment has dampened a little bit towards gold. Maybe the frothiness that was there in the sentiment towards gold of 2010, 2011 on the back of that big 10-year bull market maybe have tempered a little bit. So maybe that will help this next bull phase.
Well, I would like to think, hopefully, that the last bull market was partially affected by markets generally. I'm learning in my own time. I tend to be a fundamentals analyst by my nature, my makeup, but sentiment tends to drive markets more than facts. So I'm hoping the nature of the last financial crisis and the amount of quantitative easing we did post-financial crisis led everybody to think that inflation was going to be rampant. And when we believe that inflation is going to outpace interest rates and that real rates of return are going to be negative, that generally is when people fled back into gold. Because those expectations were so skewed during the financial crisis, people flooded very heavily back into gold, and then we had a long-term correction, a long-term bull market, longer-term bear market, and it starts again. I'm hoping people learned something from history, but you never know.
I was going to ask you that very question, actually. We're in a situation now with the US, because obviously gold's priced in dollars, where with Trump going into power, it's an inflationary measures policies are inflationary. The massive investing in infrastructure that's going to be taking place out there in the US. The potential is there for rapid inflation to come through over the next few years, isn't there? And on the back of that, an appreciation in gold.
100%. But in the short term, gold is weird. So in the short term, gold is affected by US interest rates. And the price of the US dollar. We went up to 25% or 1370 approximately this year, in terms of what gold was at. Then it's come down to 10%. So it's lost theoretically in the short term. The reason for that loss is because of the unexpected surge in the American dollar and the expectation, the highest I've ever seen it actually, of 100% consensus that rates will rise in December of this year.
Yeah.
And that has pulled gold down. So in the short term, interest rate expectations and the American dollar affect the price of gold. In the long term, real rates of return. So yes, we're going to get inflation, and that inflation, I believe, is going to affect the price of the dollar. In the short term, it's being affected by other factors.
So here we are, looking at all these forward projections. You must have a forward projection on the price of gold, mustn't you? That's what our viewers want to hear.
Of course they do, but I've been warned that making predictions have a way to come back on you.
Yeah. Give us maybe some scenarios of potentials for gold.
I think it's fair to say that gold will pace real returns. So I think the price of gold, as long as we have negative rates of return, real rates of return within any economy, gold will outpace that, and gold will grow more than that. I think that gold will, it has a huge amount to do with inflation and whatever that inflation number has been. Gold's done very badly in the last few years, and one of the reasons for that is because we've been in a quasi-deflationary environment. But gold still buys today largely what it bought 1,000 years ago, 5 years ago, 10 years ago. And I think that's what I can be sure of. I think its real value is, I do believe its real value is intrinsic. And it's got that value as long as people want to buy it. And as long as inflation is rising, then gold's price will rise as well. And with all of the new impetus that Trump seems to have lit into the economy, that spells long-term inflation. And to answer a question that I didn't quite finish earlier, the Federal Reserve can raise rates a little bit. They don't want huge negative rates of return in the economy. That's bad for people, that's bad for savers. At the same time, slight negative rates of return, and that's a balancing act. So trying to guess where inflation's going to be and then make sure the rates are slightly below it means that they can inflate away some of their debt. And because the unprecedented amounts of money have been printed through quantitative easing, they do need to inflate away some of that debt, or else it'll be very hard on the national account. So most economists would say at this point in time, it's within the Federal Reserve's or the Fed or the government's interests to have a certain amount of inflation and a certain amount of negative returns within the economy to rebalance over the long term, I'm talking 5, 10, 15 years, the Federal Reserve balance sheet. And as long as that is the case, gold should do well as well. And I can't see that it would take them less than 5 or 10 years at a minimum to try to slightly rebalance the Fed balance sheet, which means inflation and gold.